Hello and a very warm welcome to all the viewers of 3.0 TV. This is Manoj Dara. So Reserve Bank of India on 7th October 2022 released a concept note regarding launching its very own central bank digital currency. RBI had said that the development of CBDC could provide the public a risk-free virtual currency that will give them legitimate benefits without a risk of dealing in the private virtual currencies. So to explain the concept note, we have invited two special guests. Let me introduce you to Dr. Aruna Sharma, former member of Digitization Committee, Reserve Bank of India. Ma'am, welcome on 3.0 TV.
Okay, thank you.
And our second guest, Mr. Sudhin Barorkar, Global IT and Innovation Advisor. Sudhin sir, welcome on 3.0 TV, sir.
Thank you for hosting me, Manoj.
So Dr. Aruna, my first question to you is, it appears that the central bank is raising awareness of the CBDC with this concept note which is just released before the debut. If you can just take us through, what are your readings about this concept note?
Yes, you have said it right. It is more to make public aware. And besides public, all the stakeholders aware of what is the thinking process that is going on in the RBI about introduction of CBDC. There has been a talk and there has been an amendment in the parliament which gave recognition to the digital rupee, which was not a legal tender. So with that amendment, this was definitely what was to follow. And what they are coming up with at this moment of time is still the various options are getting explored. And in 5 sections, they have expressed the options on which they may be experimenting during the pilot stage and then zero down. Definitely what you said in the market, CBDC is a legal tender, so it is not a competition to crypto at all because its value is fixed, right? And crypto is something which is speculative and which, like an asset, its value may increase or decrease.
All right. So these are your opening remarks on this.
No, I think it's a very good note to put up a pilot. To think about putting up a pilot as well as come up with the concept note, which they have done. And I think with this evolution, with this kind of new adoption, right? This will pave the way, in fact, for the plug and play interoperability in the entire financial ecosystem. What has been happening is that the rise of digital assets has been unnerving a lot of the central banks globally, because obviously when things like the printing of money, the circulation of money, investor protection is something that is of a central bank remit. So I think once they come out with this concept note, get views from the public, get views from the banking ecosystem, get views from the various other ecosystems, and I think then pave the way to kind of create a digital currency posture management kind of a platform, which will then, be the foundation base to take this ahead.
All right. Since we are talking about the central bank digital currencies, ma'am, my next question to you is, RBI calls it as a watershed moment in the evolution of currency. So will the paper currency be replaced by CBDC? What's your opinion? This is for our viewers to understand. And what is the main objective behind this concept note, ma'am?
Let me make it very clear. With the coming of digital payment system, the need for the printing the currency is supposed to reduce considerably. But what you find in the market, the cash has doubled since demonetization, where it used to be nearly 16 lakh crores, it has become 29 lakh crores. So putting this in mind, what the regulator is thinking about is a shift to the modern world where you have a transaction imprint permanently, so therefore a blockchain kind of a technology, and have a change in the system of currency where instead of a printed currency, you shift to a digital currency. But definitely both are going to coexist. It is not going to be a complete replacement, at least not in near future, because smaller denomination will continue to be printed, and maybe the larger transaction, which in payment system has already gone, which will also move to the printing system of the currency of the RBI. So this major change is something they are looking forward. The first goal is definitely the need to print when they release the money in the market to be considerably reduced, and two, to have a trail of the travel story of the money, like we used to write the essay in school of the on the coin, something like that. So entire trail is itched, which is going to help them in developing a better monetary and fiscal policies.
So we were writing, actually that's the word coming in from ma'am is, so this is something, she spoke about, Sudhin sir, she spoke about the money trail, which is actually a big concern for India and its government. And as we speak, what are the main objectives, sir, behind this concept note and the CBDC way forward, sir?
I think the CBDC can definitely bring in faster transmission of money.
All right.
Especially moment a complex event takes place. For example, COVID took place, and it still took about a couple of months or nearly 3 months for the RBI and banks and the finance ministry to come together and pave the way for a moratorium, right? So It still took a lot of time, right? Whereas people were really definitely struggling because, when there is a shutdown, right, you need money. I mean, it's ultimately the people's money, right? It's the citizens' money.
Right, sir.
Right. So that is one definitely plus point where CBDC can, bring in that agility as well as help in certain, financial inclusion programs. For example, we have been doing lending, right? The banks have been doing lending. The RBI has been, set up all these priority sector targets, and all that stuff. So today it's not just a question of lending, but it's also a question of making sure that the financial inclusion programs as well as universal, basic income programs are met, and that can be definitely implemented through a newer model like a CBDC. It can also, the other aspect is also about the amount of fraud that is happening in our ecosystem, right? In 2019, as per the public domain knowledge, the entire fraud was, that is money lost by banks and by its customers, was a whopping 1,87,000 crores, right? Nearly more than $25 billion probably at those exchange rates. So whether the newer technologies like network virtualization function, adaptive security, a much more secure, maybe a zero trust architecture framework, if this can be also implemented with the CBDC, this can definitely enhance all the, the security posture management, as well as in the long run, reduce the fraud that is still plaguing the system today.
Fraud reduction is that's the word coming in from Sudhin sir. But ma'am, can you just simplify this for our viewers, that since we are talking about the technical aspect of CBDC and the way forward, can the digital rupee be converted into the paper currency? And since we are talking about wholesale CBDCs and the retail, can you just simplify this for our viewers?
Yes. For understanding, it has to be very clear that CBDC is a legal tender in a digital format. So like the issue of printed currency, they will be issuing, suppose they issue 100,000 Indian rupees in 3 months or something like that. So maybe a percentage of that they will release in the e-form and a percentage may go in the printed form. Now they are interchangeable at the same value.
Fantastic.
So if you have 100 rupees of a printed currency and you want to convert it into CBDC, you can convert it into a CBDC. So value doesn't change. Value will remain the same. And the idea behind CBDC is basically at this moment of time, number of questions are to be answered, because the claim of financial inclusion or disbursement can be achieved through DBT, because the government treasury system through PFMS is already linked to all the accounts. So if you want to disburse the money, it's a question of one policy decision taken in the morning. By evening, the money goes in the accounts. So it has become that simple as the payment system. But CBDC is more a regulatory body which will create a legal tender, a non-speculative tender, but the mode of release of it and how it is going to sort of flow through the banks, which are intermediaries, as currency is done today. Printed currency goes to the banks, and banks in turn sort of issue it to the retailers. Now, exactly the same way is to be done, or RBI directly go to the retailer.
All right.
If RBI goes to the retailer, the advantage the people like you and I will have my bank account is guaranteed only for 5 lakhs in case the bank collapses. Whereas here, being the RBI, my entire money is protected. But whether I'm going to earn interest on it or not, again, it's a gray area.
All right.
So if it, yeah.
Yeah, please go ahead, ma'am.
Yeah. So if it is not going to create an interest, then why CBDC? So all these questions, whether it is remunerated, non-remunerated, whether it is going to be directly to the retail or it's going to restrain to wholesale, all these questions are not yet answered. And what I talked about the trail before, it has to be done with great care because the Puttaswamy judgment is very, very clear on the privacy norms. And therefore, you have a paper in this concept paper, you have a complete section on anonymity. Right. So
Right.
all that will have to be take care. So today, the questions are whether it will be restricted at the initial stages only to wholesale or it will go to retail, whether it will be directly through the RBI or it will come through the banks in an indirect way. It also talks about some hybrid model. Then it is going to be remunerative or non-remunerative. And of course, what is on anonymity. And one more thing they have been talked about, token-based or account-based. Now, a lot of confusion is going to come on this issue, and that needs to be sorted out in the pilot, which is going to be done. Because the moment we say the token-based, then it will sort of come up into the retail section. So if they are not going to retail, then tokenization is not going to, it's not going to be a token, right? So all these things are interrelated, and in the pilot, this is to be tested and this is to be seen. Actually, across the globe, nobody has successfully rolled the CBDC as yet,
Fantastic.
right? Here, the difference is they have accepted it is going to be in the blockchain, which is a very good sign. Then RBI's one thing is coming out very, very clear that there is going to be a trail and they are concerned about the privacy issues. So that is also a very good sign.
Right.
And this is, at this moment of time, I'm looking at it more on the currency release management issue of the regulator, that is RBI.
All right, there is currency related issues which is actually manageable, but Sudhin sir, ma'am, Aruna ma'am had actually highlighted about the different stages wherein it will be launched, the CBDC will be launched. She mentioned about the wholesale or the retail aspect. She also spoke about how it will be issued. She also spoke about the token based account. I mean, what's your opinion, sir? How this will be implemented? What are the important aspects as a common man should focus on right now, or you have a different idea about it?
I think the role of a central bank as well as the role of commercial banks is already very, very critical, right? If it is going to happen that the central bank is also going to become a commercial bank and lend, then that is going to be a complete, I don't know whether you call it a big transformation or whether you call it innovation. It remains to be seen. But in my view, at least, I think the role of the central bank to be the lender of last resort in today's world where we are seeing this hyperinflation, we are seeing a lot of financial instability, not only in emerging markets, but as well as even in Western developed markets. I think that is very, very crucial. So my opinion is that whether the role of a central bank should be a lender of last resort as well as the banker's bank, as well as looking at the monetary aspects of the entire ecosystem. I think that should never cease to exist. That will anyway, that's, constitutionally, the way it is across all central banks. But what exactly, and I can tell you from my experience, when we did our core banking transformation in the State Bank, when I was head of innovation at State Bank in 2017, 2018, we benchmarked our core banking systems at about 24,000 transactions per second, about 1.5 billion transactions a day, to cover 500 million customers and 700 billion accounts. This is the most scalable, advanced, powerful, cutting-edge, bleeding-edge core banking system in the world, built in India by Indian technologists. So I think
Fantastic.
This kind of prowess that we have in technology, especially on the emerging technology, must be translated into use cases which our country needs. And that's, use cases like financial inclusion, use cases like universal basic income, use cases like how to reduce the fraud, use cases like how to look at, how to further, give money to the people when they actually need it at that time when a complex event happens, at the time they need it. I think that's probably should be the focus.
So, all right, ma'am, Sudhin sir had actually highlighted about the process, the UPI process and the revolution which we have seen. We are best in the world as we speak. But my next question to you, ma'am, is you mentioned about interest rate and who moved my interest rate. That is something which I am really interested in. So there is a talk as we speak that there is a talk in the market that interest system, which is actually impacting the traditional banking, will be impacted once the CBDC is rolled out. So how will this digital rupee impact the entire banking system, or you have a different idea about it?
See, it goes like this. If they go into indirect system, then definitely the way the bank work, like the moment the bank work for the digital payment system, they required lesser branches, the lesser number of people. Like that, here there will be a change on the handling of the money. And as Mr. Sujit is a banker, he will know the bankers sit late in the night to reconcile the statements. All that will now be in an auto mode and real-time basis. So that is going to make a difference. But if RBI decides to go for the direct mode under the CBDT, then the entire banking structure is going to change, because a direct system and remunerative. So in the sense that you can have I have my account directly with the RBI and I earn on savings accounts. I can have fixed deposits. I can invest from there and do the digital payments. Then all that is going to make a difference. And I'm very sure the RBI or any central bank is not capable of handling this. So ideally, they will have to go for the indirect system, using the banks and definitely bringing a transformation of the banks in which they handle the money. And as far as the interest rates are concerned, it will continue to be the account systems where you have the accounts in the banks and then you operate on that instead of coming into the retail level where tokens are there. Already with the tokenizations on the payment by card, when the entire system is not prepared as yet, there is huge failure in this festive season. And lots of problems are emerging. So therefore, this pilot idea is very, very good to iron out which model they should go in for. And and it could be a phased model also. Like first phase, you go only for the wholesale and indirect system, and then maybe you graduate into retail and direct systems if things need be, because that is how it is going to be. And as far as the lending part is concerned, that is a prerogative of the banks historically. And you have non-banks also. Now you have the NBFCs and microfinance institutions, which are playing a vital role in this entire system of lending. Now here, if RBI decides to come into that role directly, then definitely they will have to restructure themselves and these banks will start becoming redundant as we go. And 1.3 billion population handling, it's no joke. So it's better to so you may have a distributed ledger, but then management of that ledger itself can be voluminous, can be very, very difficult. So I feel this concept paper very clearly says that pilot will decide the phases on which this will be rolled out and how it is going to move ahead. So that calling minimum disruption to the system. And as far as the retailer is concerned, on date, they don't have to worry much. It is the bankers where the worry is on the table of the bankers.
So Sudhin sir, are you worried about if this CBDCs are actually they will pay out interest for the retail investors? Are you worried about it, sir?
No, I think just continue on what Aruna said. I think as long as the citizens get the benefit. For example, if the central bank feels that the cost of money or the cost of loans can be reduced, right? The interest rates can be reduced. Then this is one way of taking it ahead and at least trying to figure that out. So I think the concept again, that's my view. I think the the central bank model must be differentiated between a commercial bank model, right? They can be a plug and play depending on various use cases. I think that's what some of the countries like China did, where just for the payment transactions and for these e-com transactions, they came out with a retail CBDC as a pilot. Probably, I think they probably also implemented it on the ground. So I think the other aspect of it is not just what the central bank role is and what the bank role is. All over the world, we have seen this from QE, from easy money. We have now gone into QT, right? Quantitative tightening. And this is a good thing in the long run for that particular currency, because the thought of easy money and this has been driving, the easy money has been driving inflation, right? And it's hyperinflation all over the world in levels we have never seen in decades, right? So I think the other aspect of getting in a CBDC is also how to build up a posture management platform so that you can also inform and communicate to the citizens, right, to the borrowers, that why is my home loan why is my car loan costing me so much, right? If the price of onions has increased by 100%, why should I pay so much money for my home loan, right? So the programmability aspect of a CBDC, right, and in relation to getting more financial stability, also making sure that there's discipline in the entire financial ecosystem, also making sure that people who need the money get the money at a low cost. Otherwise, it's going to be you have a double blow effect, right? You have hyperinflation, high inflation, and also now higher interest for loans, right? So this programmability, if used well, if used wisely, can be, I think, a game changer for the central banks and the commercial banks to work together and come out with this new transformation and innovation.
Fantastic. Since we're talking about transformation and innovation, Dr. Aruna, my next question to you is, few minutes back, Sudhin sir highlighted about the financial inclusion. And the concept note actually speaks about financial inclusion as well, like reaching out to the remote areas where internet access is not available. So how this is going to play a big role in connecting the end users, ma'am?
Like I was involved when we developed the financial inclusion model. And what happens is if you involve all the post offices and cooperative banks, and now the PACs are also being talked about, considered as a place where transaction can take place, then with that, you will have a physical entity with everybody having an account there. Perfect. And that builds up the confidence. So the financial inclusion part of it, to develop the confidence, requires it. And the unreachable are able to transact because the poorest of the poor, even the Narega payments are made DBT. So they are involved into it. But in the CBDT as a concept is very, very good in the countries like Africa and others who don't have the luxury of having these kind of institutions. So we have the banks, we have post offices, we have cooperative banks, we have PACs, and yet if it's unreachable, you will be able to transact it through it. Now, without internet connection is a problem issue. Because when we dealt with BC, that is the business correspondent, every day evening they used to run and upload it from the nearest point so that the accounts are updated, right? So even if technologically we talk about that, okay, wherever there is no internet also you can operate, yes, but financial institutions are not at all in comfort zone there. So let me be very blunt about it. So what is going to make a difference here is that unreached areas also have an access. The access part of it, definitely you have a physical place and you have this CBDT, but CBDT is not for transaction. It will come through commercial banks. And that is what is going to make the difference when we talk of the financial inclusion. And financial inclusion means an access to all financial products. That is your deposits, your credits, your insurance, everything. That access is the real financial inclusion. And all that will need a physical person to educate them, to make them learn and everything. The digital technology only increases the access by a percentage. I put it
Perfect.
that way.
Perfect. Sudhin sir, let's move from limited banking access area to cyber security concerns. So my next question to you is, at a time when every day there is a threat or concern about cyber attacks, so how is RBI going to address these challenges? So you were a part of a broader operation as far as SBI was concerned. So how have you addressed those issues, and what are these challenges according to you will be for RBI going forward?
I think definitely blockchain-based CBDC does have its inherent advantage of it's like a secure database, right, spread over a whole lot of nodes, right? So the security aspect is already baked into a blockchain, because you can only do a create, read, update, right? You can't do a create, read, update, and delete, right? So the sanctity, the immutability of the blockchain, of the blockchain transactions is always maintained.
All right.
So I think the blockchain will bring about better cybersecurity, will bring about better try to help reduce the fraud, especially on the KYC and eKYC. And as well as it will, in fact, now probably, have a larger interface across the entire financial ecosystem. So it's not just banking or payments. As you said, it can also move on to insurance. It can also move on to bank assurance models. It can also move on to the equity markets. It can also move on to, a lot of the other investments. It can also move on to better investor protection. Maybe now that you have the central bank backing it, can the 5 lakh rupee or that limit be increased as a deposit guarantee? I don't know, but maybe it can, right? As well as, so we are now looking at the entire financial rail digital infrastructure across all ecosystems.
Fantastic.
Right? So whether it is is the entire BFSI space, and there are so many related sub ecosystems associated with that. So at any given time, right? Today it's not just the supply of money. Today it's also the wealth creation, right? The amount of money that is being held in stocks, maybe in bonds, right? Maybe in a whole lot of other assets. Maybe nowadays, maybe in the future, even alternative assets, right? So this entire coverage, if brought about through a single, platform like a CBDC, where the regulator itself is in charge, where also the regulator can get in the other regulators like SEBI and IRDA, right, to also help them out. I think that will be very, very beneficial.
All right. My closing question to you is, ma'am, so what are the challenges going forward as far as CBDC rollout is concerned, and what are the steps? What is your recommendation? How these challenges can be overcome, ma'am?
See, the challenge is very, very clear that there has to be a complete clarity and a holistic approach to the system. It cannot be a patchwork kind of a work.
Exactly.
So that is the first thing which is very important. And the various issues which I raised before, that clarity has to come up of their phases and how they are going to roll it down. Because that is going to have an impact with the stakeholders, and there has to be a constant dialogue with the banking and the non-banking systems. That is very, very important, and the fintech world which is evolving. And when you are talking about the investment part of it, automatically the crypto, which is yet to have a regulation in India, and where the investments are happening in a very big way, and it is speculative. So that definition will also need a clarity, so that, all the financial investment options, all the financial way the retailer keeps their money, that clarity will have to inbuilt. So here I will just say in a single sentence that all the 5 things they have identified to do everywhere, there is a either or. Either we'll do this or we'll do that. So that either or has to be cleared in the phase 1 of the pilot, and then sort of roll it down, because that will cause the least of the disruption, because one cannot afford the disruption. Second thing is global dialogue is also very important, because It is supposed to ease the cross-border transactions.
Exactly.
And the world is equally struggling on the way the CBDC is going to roll down. Even China, they announced it first, but they had a speed breaker into their speed in which they wanted to move ahead. So there are a lot of these loose ends which needs to be tied up very tightly. And then, yes, I totally agree with my co-panelists that the future can be fantastic on the CBDC as a foundation base. But it has to be traded with clarity and caution.
So few keywords, Sudhin sir, I have picked up with Dr. Aruna's closing remarks is there is some clarity which is required, and there are a lot of loose ends that need to be addressed. What's your closing remarks, sir?
No, I think innovation and transformation must happen. The banks I've worked in, Barclays has been more than 345 years old, right? It's even older than the Bank of England. SBI is more than 2 centuries old. And these great institutions are there because of the constant transformation and innovation. And I think if that transformation and innovation can also, even the central banks can take it up, even RBI can take it up, will definitely benefit society, will definitely benefit all citizens, and will definitely pave the way for the future of money. Wherein I see, for especially, seeing the way that the country is growing, the way that we are now, even more integrated with the world, the way that the entire ecosystem, financial ecosystem is growing. I think it will be a great benefit, and look forward to such and look forward for the central bank to usher in these new innovations and transformations.
All right. Thank you so much, Sudhin sir, for being part of the discussion. Thank you so much, ma'am, for taking part in this panel discussion on CBDC. It was indeed a pleasure to have you both. Thank you so much.
Thank you. Thank you.
All right, that's all there is in today's special interaction on central bank digital currency. This is Manoj Dara signing off, but keep watching 3.0 TV for more such interesting interviews. Thank you.